Sukumar, what's your assessment of the budget?
I think the budget is on expected lines. I think the finance minister has continued with moderate taxation and is hoping for increase in revenues because of strong economic growth. So I think generally I think the direct and indirect taxation is on expected lines.
Sukumar, what about, the current account deficit number that has been laid out at 4.6%? Of course, some believe that this would be on account of the adjustment in the recalculation of the inflation figure, bringing in or accounting for the change in the base year. And from that perspective, it just seems like an adjustment of the number that would have been in place otherwise. Should the market really read into the 4.6% fiscal deficit number as really being a realistic estimate of where things stand on the inflation calculations front?
Based on the first cut analysis, it looks like the government is expecting 20% plus revenue growth, which will depend on the profitability of the corporate sector, because a big portion of the growth in revenues is going to come from corporate income tax growth. And that will depend on the earnings growth for the market continuing at the expected trajectory. Now there are obvious risks to that because a lot of companies are missing estimates, and there are concerns about certain sections of the industrial sector. They seem to be losing momentum. So there's a risk that the revenues could underperform estimates. The second issue is the subsidies have been assumed at a certain level, and which will be very difficult to actually realize if the oil prices remain at the current levels or anywhere close to the current levels. So I see two obvious risks to achieving the fiscal deficit targets.